Well, maybe it does now. All right. Testing, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. Good morning, folks. Hope you had a wonderful weekend. Let's get the party started. So, welcome to Forex.Today. This is your daily Forex trading strategy session. Let me remind you that trading Forex is risky, not appropriate for everyone. You could possibly lose all the money you put into your trading account. Your past performance is not indicative of future results, but always stay small and stay humble, which means don't gamble and over leverage yourself and put in giant sized trades even though you don't have any money. And certainly, since you could lose every penny, don't risk money you cannot afford to lose. Hey, yo, you know this kid? Hi, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows traders access to Forex, but also to things like energies and metals and indices and also binary options, which I like to use for scalping, but I also like to use them for hedging, as I've taught you many times before. To attend these live sessions and interact with me, since the audience can ask questions, I ask you to register, and then you can go to webinars and click on the the webinar coming up, and you'll be in just like that. Also, once you register and log in, you'll see that a community chat will pop up like this. And throughout the trading day, let's say the London Open, you can interact with other Forex traders like yourself. Cool. Oh, and the most recent recording is going to be right there on the homepage. But I'll take you to the site because we need to do commitment of traders report today, and we also need to go through the calendar. So you'll see more about the site. All right. Quick update. Chinese GDP, 1.8 year over year, still below 7%. 6-year low. 1, 2, you rock. Yeah. Well, you know, a lot of countries would like 6.9%. That is quite low for China. And, well, you know what? That's a relief because we were expecting even worse data, even though it says 6.8 expected, and it could have been a lot worse. So 6.9 versus 6.8. And I still don't think any country can be that good at calculating whether it's 6.8 or 6.9. But whatever. So a little better than expected. Yay. Chinese industrial production, they missed us. 5.7 versus 6.0. Now, it seems to me a very interesting situation where China is allowing their currency to devalue, which means the consumer will not be able to purchase as much as normal because their currency is not worth as much. So that's going to be counterproductive if you're trying to create a consumer economy and give your consumer weaker currencies. So that kind of goes back to saying, you know, that we're giving up on creating a consumer economy, at least for now. And that would say we're going back to the old idea that we'll become an exporting nation, right? But then the problem with that is that ain't working either because industrial production's down. Yeah, so it's one of these things. If they're caught in between policies, obviously there's debates going on throughout the leaders in power, and they're messing it all up. It's sort of like Japan doing quantitative easing and raising taxes at the same time. You've seen the results of a mixed bag policy. you don't even get mixed results, you get terrible results. So hopefully they figure that out sooner than later. But it could have been a lot worse. So the market looked at it as positive. Less bad is good, right? Aussie dollar jumped, Kiwi dollar jumped, USD yen, right? So anyways, that was Asia. Less news per se coming out of the European session. But this week we have an ECB decision, and the focus is, whether they increase quantitative easing or not. And of course, we did talk about this several weeks ago. So, well, here we are now. Here we are. So this is on the plate. Lots of ECB members talking about quantitative easing. Very nice. Morgan Stanley stated the ECB might have to cut the deposit rate further into negative territory. Yep. Because the deposit rate becomes a floor, sort of like the discount rate becomes a ceiling. So if they lower that into negative territory, well, they could go there. They could fall negative. And Kuroda is also still talking about not needing to expand quantitative easing. And that's too bad. Yeah, basement. Yeah, I guess so. You're right. Good comment. I like that. So there you are. That's where we are in the world of Forex. Just an update on the trades we made Friday, guess. Had a little short here on Euro USD, which is still open. 57 pips. And then the equal but opposite to that is the USD yen. I messed this one up. Look at this. This is for some reason I have this one set for scalping the stock market. All right. Somewhere in here there's a USD yen chart. There we are. And that one's still open. That has a little more, 73. So nothing major yet. The markets are still pretty quiet. But they're still in. I move my stops to, just below break even. And if you're looking at it on a daily chart, this could easily come down and get knocked out. I understand that. I'm okay with that. But I can move my stop to break even or -1 because, we have a closed candle here and then we have a closed bullish engulfing candle here. Not engulfing this, and this is a, what do they call this? A morning star? I remember learning about that 10, 12 years ago. Oh, am I tired? Yeah, don't tell anybody, but I'm sick. But don't worry about that. So anyways, yeah, I remember things like this used to be a big deal. Ooh, look, a morning star. Whatever. So it's a green candle, good. As long as we stay above this green candle, we should be fine. The big situation here is we're going to test the 21. Maybe it holds, maybe it don't. We'll see. But I don't have any risk in the market, so who cares, right? Who cares? Whatever. It's only money. At this point, it's all opportunity cost. Oh yeah, maybe we did it on this one. I don't know what we were talking about here. Maybe this shows. Yeah, I can't remember now the circumstances of the trades, but whatever. Let's do a quick update on commodities. So on the shorter term, it's going up pretty fast, which it usually means a weak dollar. Okay, but still no high above sort of key highs. But this would be a very interesting test because if it breaks that and it'll challenge this, then it'll come back down, and somewhere between the 382 and 618 could easily make a challenge to actually make a serious higher high. So yeah, interesting. But you have to recall when this was falling, I think the last trade we had on gold was sell it at 1382. Right, so it dropped from 1400 down near 1000. But when we did that, the talk was, we should be able to get somewhere between 1000 and 1100, and then around 1100, people that hold gold are going to use the futures market to try to prop up the market and keep it above 1000. Just psychologically, 1000 is important, so you're going to put up a perimeter and defend it. That could be possibly happening. So, it could head up from 1100, but not necessarily because it's worth more. It's just people don't want it to be worth less. So that you have these sort of rallies and then collapses, rallies and collapses. And I don't think it's worth any more or less than maybe 1100-ish, 1000-ish, right? So, yeah, don't really know. This recent move in gold, I think, is more related to the overvalued dollar, which would mean undervalued gold on the short term, but not on the long term. Long term meaning weeks versus days or hours. You know what I mean? I'm not talking long term like 5 years, 10 years, that kind of thing. But I think it'd be very interesting to break this area here, this resistance area. If that were to break, then maybe the dollar is extremely overbought. But you can see right now I own dollar and on two different currency pairs, and I'm making money. So it doesn't seem like that trade's over yet. But we do understand that the current weakness in the dollar seems to be more that traders were front running a September rate hike, didn't get it, then realized they're not going to get it in October either. So now it's December, so they're on the wrong side of the trade. And who wants to who wants to hold a losing trade for 2 months? Cream bought physical at 1079. Yeah, see, that's if you want to own it, that would be probably the perfect entry, Kareem. If you actually want to own physical gold. My problem as a trader slash investor is it doesn't pay me anything, and if I'm holding real gold, it actually there's a tax on it, isn't there? Oh, is that right, Sean? And do I have to update? So no. What's the tax? The tax is that you have to secure it. Oops, that's not what I want. You're not going to put $2 million in gold, in your cigar humidor. Maybe I'll go in here. Oh, so it did break that area. Terrible. Okay. Yeah, totally. Felipe, the last time I told someone to buy gold publicly, I was at. I even have pictures of it somewhere. If you needed me to grab the But I was at some sort of investing conference or trading conference, like I think it was Las Vegas, Traders Expo maybe, Vegas. I don't know, a long time ago. But the memory was great because I had this opportunity to actually speak inside of a broker's booth. So that what they did is they bought like 10 booths and then made one giant booth out of it. They spent a ton of money on this thing. And so it was this a huge booth, and they invited me to speak because I was an introducing broker at the time. And they set up a big TV, and they just wanted me to like gather a crowd to their booth. So anyway, so I'm standing there, and the microphone's not loud enough, and someone had a bullhorn. I don't know where that came from, but I have this giant TV behind me, and I have a bullhorn in my hand, and I'm yelling into it. And behind me, there's a chart that shows that you should buy gold at $650 an ounce. And I'm yelling at people to buy gold at $650 an ounce. Cool memory, man. It's really cool. The other thing I remember later on in the presentation, actually, as I'm going through the setup to step by step why I think gold's going to go up. This woman walks right up beside me, and there's a fake plant set up in this booth and next to the TV to make it look nice. She walks over the booth and vomits into the fake plant pot. Hey, welcome to Vegas, baby. Yeah, it was that bad. But the show must go on. Yeah, blew her. Anyways, so yeah, buy gold. I told everyone too that I knew in when I was running FX Bootcamp every day. I told them to fill their closets full of gold and their swimming pools full of crude oil. And crude went from $40 a barrel to $200. Yeah, it was way back then. Yeah, must have had dirty gold, huh? So very interesting stuff. So I haven't told people and I'm even questioning $1,000. I wouldn't be shocked. I'm not going to predict it because there's a lot of things that go on in the industry that are important. But as far as what I would guess supply and demand would be, I would not be surprised at all if we did drop below $1,000 an ounce in the next 5 years. And then most likely we'll head back up, but not radically. Because, the world is still deleveraging and stuff like that. But anyways. Yeah, and oil. I know, I look at these things. We've already talked about it way before it's even happened. So it feels silly to still talk about it. So look at this, right? It went up to 50 and then it came back down. Yeah, I mean, this is what gold or oil is worth. It's not worth $30 and it ain't worth $70. So we're going to be here a very long time. And do you really care if it's $55 a barrel or 45? It wouldn't change anything. I mean, I guess if you're an oil company, it would be important. Right? Because, it comes down to the average consumer. You're like, oh man, gasoline used to be $2.09 a gallon, but now it's $2.35 a gallon. Forget it. I'm going to take the bus to work. Yeah, inelasticity. So whatever, it's cheap. It's fair. It's fairly priced. We found down here $35 was just too cheap. Up here, $50 is just too psychological. So I think this is fine for now, right? Do you see any particular reason why supply would fall or demand would go up? We had, let me get a quote for you, if I can find it. This would be brought to you by TradeTheNews.com if I can find the quote, but maybe I can't find the quote. So, oh, all right. The oil minister of Iran. No one was satisfied with the current level of oil prices, but no producers were seeking oil above $80 a barrel. Expected no change in OPEC production policy at its December meeting, but added OPEC should cut oil production to help manage the market. Okay, so he thinks OPEC should cut oil production, but they're not going to cut oil production. So supply is going to stay the same. And do you think demand is radically going to drop? No, of course. Demand is never going to drop. So is demand going to go up? Yeah, sure, in the next 5 years. Well, how about like in the next 5 days? Why? You think what, the Europeans are suddenly going to feel like they're filthy, stinking rich? Yeah, if they do, you get like countries like Norway that are filthy, stinking rich on oil. And what do they do with their money? They buy Teslas. But I guess it's good, like the number one rule when you're a drug dealer is you never use your own stuff. You never use your own product, right? I guess that's pretty smart. Sell people oil and then buy yourself a Tesla. So, I don't think demand is going to spike on the short term. I don't think demand is going to fall in the short term. I don't think supply is going to plummet on the short term, and then we got enough. So, this is probably about right, give or take, $5 below and $5 above, right? No, Igor said I thought Iran already priced it. Don't get confused with all of this. World's flooding and with the. Let's look at the facts. What we care about is OPEC going to increase production or decrease production. That's all that matters. And right now it seems like they're not going to. That's enough. We're done. If they increase production, price would fall. If they decrease production, probably nothing would happen. It might blip up to 50 again and then come right back down. Who cares? We have enough oil. If OPEC cut oil production, it's because they don't have anywhere to put their oil. It's probably not because they, feel concerned about, it's not an altruistic thing. If they pump oil, where do they put it if we're not using it? Right? It can't float in the air. You have to put it in a tank somewhere, but there's no tanks left. So you got to put it in a boat and just park it offshore for a while. But those boats are full. There's nowhere else to put the oil. So maybe they'll vote and say, you know what, we should probably stop pumping it into the sand. So anyways, I think it's fairly priced. Okay, so in our world right now, what's driving prices of currencies seem to be, the bond market and the stock market. We're in earnings week. Okay, last week's low was in here. Last week's high was up in here. We started the week here. We ended the week here. Okay. So, is the market bullish or bearish? Don't give me an opinion, just tell me the fact. Bullish. So, if you were doing pivot point theory, what would be the expected low And what would be the expected high for this week for the S&P 500? Don't give me a price, give me a pivot. No, low is not weekly pivot. Thank you. So the predicted range is M2 to M4. So we could do this week. Not saying we have to, but that's the projection. And if weekly pivot point is the bottom of the week, then that's unusually bullish. And therefore, it would go a little farther, and that means it would take it to the next pivot, which is R2. So that'd be WPP, right? Weekly pivot point to weekly R2. Yeah, that can happen, but I wouldn't plan on it. So, like it happened last week, but look, I didn't put that in my book, so it can't be true. Consult the book of Forex. Right? This is, I actually trade the way that I teach. So, the dog actually eats the dog food. So, the answers are in my book. So, that's the projected range. We'll probably stay above this level and work our way up. Okay? And if it falls, if we break below that, then all bets are off. Okay? So if price does come to these areas, I'm going to watch it like a hawk, drop into a smaller time frame, and look for reversal patterns or moving average crossovers or oscillator crossovers. Put in a trade, put in a stop. After a period of time, move my stop to break even, go find another trade. Okay? How about if you're watching the stock market open? How about that? It's 9:15 New York time, and price does drop, and then turns green. You could say, look, the market's opening bearish in a bullish uptrend, and you look to buy the dip, right? The drop and stop, the opposite of a pop, pop and drop, drop and stop. So anyways, like anything else, here's what I recommend. Decide whether you're a bull or a bear, and be prepared to react at the right price, the price that you like. So if you think the stock market is going up to weekly M4 this week, then you should enjoy red candles. You could say, oh man, it's coming right in here. Oh, can't wait. I'm going to buy it down in here. Stick to your guns, right? And notice how the ultimate one here, the M2, since we are guessing M2 to M4, not guessing, we're using pivot point theory to predict that. You can see it's pretty gosh darn close to a nice little roll reversal anyways. So maybe bearish on Monday, bullish on Tuesday, Wednesday, Thursday. You see what I mean? Also this week, we're continuing with earnings season. And this week's a very, very busy earnings season. Or this week is a very, very busy earnings week, I should say in English. So there's going to be a lot of play. And, if you have, a consumer confidence number coming out this week on the calendar, you know what? Nobody cares about that. What they're interested in is whether the companies in their portfolio are making money or losing money. All right, so always put things into context. That's what is moving the market right now. And those that are finding themselves on the wrong companies, some companies are going to earn money. Some companies are not going to earn money. So if you own a portfolio and you're holding the wrong companies, stock market probably come down on those, and they'll probably go to cash, but cash doesn't earn money, so they're going to buy short-term bonds, and so the bond market's going to rally, and prices will go up and interest rates will fall. But then they'll get together with their smarty pants analysts and they'll make some decisions and look at some research and buy new companies next week to replace their dogs, right? And why would they do that? Because they're paid to invest money. They're not paid to hold cash. It's not their job. And if they're holding cash, their clients will say, "Well, give me my cash. I'll do something with it. If you're not going to use my cash, give it to me." So they're going to find a company to buy, and they need to find it fast. So, anyways, earnings season is important. But remember, the vast majority of money managers want the stock market to go up. They're not going to get paid to short sell. Most can't. Okay. So let's go to Forex.Today. Come along with me on a magic carpet ride. We're going on a trip in my favorite rocket ship, flying through the skies. All right, here we go. Almost done. What do I think about Walmart long term? Don't know. If you're talking like truly long term, I usually ask myself one question when I'm looking at, especially a company that's in distressed. Volkswagen is another one, right? You ask yourself, do you believe with every bone in your body that the company will be around 25 years from now? And if the answer is yes, you should buy it. If you can buy it cheap, if you can get a 10, 20, 30% discount, and you just believe with every fiber of your being that that company will be around in 25 years, then buy it. Because it will be higher in 25 years. All right? 25 years ago, I bought Apple for $6 a share. So, hey, Beasta, I've sent you emails, but you haven't responded. Do we get that computer thing taken care of? Or is that still lurking? Yeah? I mean, all right, cool. So, anyways, yeah, so if you're going to make a long-term decision, that by and far is a lot of the beginning. Can you get a discount? Right? Can you get a discount and can you hold the company for 25 years? And then if the answer is yes, you should probably consider it. Thank you, Debista. All right. Should you read the meeting minutes out of the RBA? Okay. And do we care? Yeah. So they're devaluing their currency, but the downside to that is it forces investors out of out of one asset class and into another. So their problem is it's creating a housing bubble. Because where else are you going to put your money? Just like what happened here in the United States after the .com crash. There was nothing to do with your money except put it in real estate. Okay. So that's just a consequence of the monetary policy. So be very interesting to see how they feel about, because you got to remember when the meeting occurred, what, it was more like 69 cents. So be interesting to read. That's all. I've read many meeting minutes from the RBA. It's not a difficult thing to read. Well, uh, Islam that's what we're doing. This is what we're doing. In fact, it doesn't even have to be, which, I mean, you already know euro is going to be in play. Why would that be? Why have I already, right? Why? Why did I state that? It was probably one of the first things we talked about today. Why though? Right, the ECB. So that's going to be in play. And if they add more, if they discuss adding more quantitative easing or discuss the possibility of thinking about maybe additional quantitative easing, because if they discuss it, then you know they're going to do it. So what happens? Yeah, Euro USD will fall. I'm already in the trade. Oh, I see. So, yeah, all right. So I'm in that trade. Cool. But anyways, RBA meeting minutes, be very interesting to see what's going on, especially, if you're thinking about owning Aussie dollars and you're worried about it going down to 60. Yeah, you might own it at 72, but what if it comes down to 60, Um, it would be worrisome, right? And are you worried about the daily chart on the Aussie dollar? If you're long, well, yeah, because the stochastics isn't going with you, which means price isn't making higher highs. Now, have we made a lower low? No. So you got to be a little worried, right? So I think the meeting minutes in the Asian session will matter. So maybe you should read them, right? Act as if. Act as if you're already a successful professional Forex trader. How could you possibly be taken seriously if you don't know what the RBA is thinking? Oh well, I don't do that. Oh, I just like to guess what the Aussie's going to be worth. I don't like to understand or know what the people in charge of the valuation of the RB of the Aussie dollar think. I don't care. I just react. It just doesn't sound good. Like, look, let's look at it objectively here. The people that price the value of the Aussie dollar, and of course they do that through open market operations, they do that through verbal intervention, they could actually do it through actual intervention. But whatever their policy is, whether it's to lower interest rates or raise interest rates or normalize them or do quantitative easing or not quantitative easing or all these different things that go into monetary policy, it directly changes the value of the currency. They're in control of the value of the currency. Read the meeting minutes so that you can see what's on their mind in making that decision. Okay? All right. Building permits, fine. Housing permits, fine. Or housing starts, okay. Good, fine, fine, good, good. Fed speak? Yeah. All the way to when, right? Anyways, let's go in here, blah, 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 blah. Lots of data out of Japan on the 21st. By the way, what is important about October 21st, 2015? Does anybody know? It's incredibly important. The meeting minutes, first of the... What else? In Back to the Future 2, where they get into their DeLorean time machine and go to the future, they land in October 21st, 2015, 25 years in the future. That's the day they land. So get ready for Michael J. Fox to land in your backyard. Is that funny? Yeah, I know. I know these things. Pretty pathetic, right? I did play football. I do have a high school record for football. So, all right. All right. So, anyways, on the 21st here, it's just an Asian session you want to pay particular attention to. Okay. Fine. Bank of Canada monetary policy report. Look, an interest rate decision and monetary policy report. Okay. Should we pay attention to that? Yeah. Do you think Canada's going to say something good? Like, oh, it's all good here. If you think that, maybe you want to buy Canadian dollars. Do you think they'll say something horrific? I think that's more in the realm of possible. But what if they say neither? Well, that'll be interesting too, and maybe it'll be short-term rally and then weakness again, just because it could have been worse. So that's good news, but then it's not better, so that's bad news, and so you get strong Canadian dollar for a day and a half, and then weak. Just go back to doing what we're doing. So again, another opportunity to act as if you're already successful, you're already professional. You can actually pay attention. Okay. Now, one thing, if you want to try to get super extra bonus points, you see all these things like William Dudley speaks, very important member, right? Powell speaks, cool, right? The assistant governor for the RBA is speaking. Sometimes to get the super extra bonus points, you Google around and try to find if you can watch it live or get a recording of the meeting. Very often you can. I've actually listened to the finance minister of Australia give a presentation to a bunch of finance professionals at like a Holiday Inn in some suburb outside of Sydney. No, I didn't get the pasta buffet, but it was there, and I was able to listen. I was able to download, I think, the slides, and I'll tell you what, it was incredibly interesting to hear the finance minister not just talk to a bunch of reporters, because then he has to speak in layman terms like, oh, well, it's pretty good, we still have money, to suddenly he's talking to finance professionals about the financing, of the country of Australia. And it was fabulously interesting. If you like that kind of stuff. He was talking about how many bonds are outstanding, and that he can tell you how many bonds foreigners own in Australia, and it's a huge amount. So he's like, foreigners own 72% of Australia. There's no way for us to know who owns 72% of Australia. And just, the discussions about that and how they can try to kind of guess on this, that, and the other thing, but how they really don't know, and what problems this could pose, and then he had all these fabulous charts. And, wow, it was just awesome. So, like I said, if you want to do this for a living, fall in love with doing it. I read a book written by an Aikido black belt, And it was very interesting. He says a lot of people they want to take lessons, whether it's Aikido or karate or taekwondo or whatever it is, and they want to get to black belt. They want to boom, boom, boom. Like, look at me, coach. Kick, kick, punch, punch, kick, kick, punch, punch. Make me a black belt. Kick, kick, punch, punch. Go, go, go. And he's like, that's the worst way to become a black belt. And even if you did everything you're supposed to do, you still would be a lousy black belt, because you don't have any of the patience and discipline, and you don't actually enjoy being in your martial art. It's not an art to you. It's a checklist. Bang out a black belt. So he said, to truly become a master, you have to enjoy the plateau, because he says inevitably you learn, right? And then you graduate to the next belt. And then you have to relearn the old stuff that you just learned, because you learned it and you can do it, but you may not quite have mastered it yet, but you know it. So you have to continually renew your knowledge until it becomes part of you, part of the flow of your essence. But then you revert. You have a mean reversion, right? You learned all this stuff, but then you have to fall back and relearn it again. Meanwhile, you're learning new stuff. So you regress for a long time. But he says that's the part you're supposed to enjoy the most. Not moving forward, but being there. Just being it. You're like, I'm a yellow belt in Aikido. How awesome is that? Instead of worried about the next belt. What's the next belt? When do I get the brown? When do we get the... So, enjoy the plateau, which another way of saying is just enjoy being in Aikido. Just enjoy being surrounded by it. Enjoy the smell of the gym. Take pride in what you're doing now. Right? So, in this case, figure out when the assistant governor of the Reserve Bank of Australia is speaking, and see if you can Google and get like a Google Hangout on him or something. It happens. Okay? It happens, but do it. And do it just because you like to. It's not going to hurt. It'll be a small sacrifice. You'll have to give up Dancing with the Stars, because it'll take an hour of your time. Oh, well. So Tico says, sometimes I don't understand their expressions. Yes, but that's why you do it, Tico. Harvard seems to do stuff like, let me give you homework on a bunch of stuff I haven't taught you about, and you need to go figure it out. That's how Harvard seems to teach. And if you're dedicated enough to put in 20 hours to solve something that is supposed to take 2 hours, because we haven't taught you, so you're just supposed to either know or figure it out. And most people probably just quit because it's too hard. I guess that's but just like, figure it out. So highlight the stuff. If there's an expression in there, highlight it, Google it, spend 3 hours figuring out what he means in one sentence. But then that effort makes you excellent. Most people are unwilling or incapable of doing it. So if you can do that, you're probably in the top 5% in Forex that could probably make money at doing this as a living, right? So it's just do it because you don't understand it. And just realize if 95% of retail traders eventually fail, it might be because they don't have that type of dedication. And you're just, so when I started, I realized if the people that succeed probably do things like that, then doing that would be a step in the right direction. And I was willing to do whatever it takes. So if I have to spend 2 hours Googling around trying to find when this assistant governor of the RBA is speaking, and maybe I can download a transcript or download his PowerPoint slides, or then you know what? I'm going to do it. Watch me, baby, right? And that was sort of my attitude. You know, I wasn't afraid of failure. I was afraid of not having done the work. Like, I was afraid I had the potential inside of me, but what if I don't meet my own potential? What if I actually watch Dancing with the Stars instead of that? Well, then I'm delaying my inevitable success. But what if I never obtain my destiny? What, isn't that, like, to me, that's scary. Like, really? I didn't achieve my destiny? I robbed myself of that for Dancing with the Stars? Like, really? Right? Oh, but it's the final on The Voice. Shh, shh, shh. Pharrell is speaking. Shh. Right? It's like, it'd be so frightening to not achieve your destiny. So, wow, Mike, I just have to do it. I have to do it. Felipe just read. No, but yeah, no, whatever, you know. So anyways, that's how I look at it anyways. That's my point of view. All right, the ECB is going to make an interest rate decision. Okay. The press conference. Skip it. Well, the funny thing is, if you're already in the trade and you already have your stop at break even, maybe you do go golfing that day. I have a date with you though. Right. So, but anyways, interesting stuff going on. I think we should pay attention to the ECB and what they think and what they say. And it'd be interesting if they did, like Morgan Stanley said today. It would be interesting if they lowered the floor and created a basement for short-term interest rates to go negative. Now, that's interesting because banks that have money parked at the ECB will now be penalized. You see what I mean? How would you like to pay interest to your bank? Because remember, the bank is really essentially borrowing money from you and then investing it in long-term investments to make a lot of money, and then they pay you a pittance, right? But what if they actually charged you? Like gold, for example. Whoever said they bought gold, I said, well, there's a tax on that. And they're like, no, it's not a tax in my country. Well, that's not what I mean. It means you're not going to put $3 million worth of gold in your closet. Because someone could just liberate that from you by sticking a gun in your face. And that's the best case scenario. There's a lot of other worst case scenarios. And your gold in every scenario goes away. So yeah, you got to put it somewhere safe, in a vault, in a building made out of stone or steel, and with guards with guns and cameras everywhere, barbed wire. I mean, all of a sudden you got to pay for all that, bro. That's a tax. It's a carrying costs. Okay? So there's a tax, no matter where you are. You're penalized to hold it. Well, what if it was the same thing? So if you're now your Deutsche Bank, how much money do you have at the ECB? Is it a lot? Well, what is the monetary base? Oh my goodness. Are we getting into the monetary base? Am I going to be able to draw on this? Is this going to let me draw? Oh. Too bad. Yeah. Anyways, monetary base. You have your required reserves, you have your excess reserves, and then you have currency. Okay? Now, the Deutsche Bank is required by law, by the ECB, to keep a certain fraction of all their deposits they need to put it at the ECB. Okay? But then, so that's like law. The central bank decides that. 10% of all your deposits, Deutsche Bank, needs to sit in our vault here at the ECB. So they move the 10%. That's automatic. Okay? And if they don't have enough, then they need to borrow and pay LIBOR on it, or Eurobor, so sorry, right? From the interbanking market. Fine. But one way or another, boom, those reserves are going to be there. All right? But there's also excess reserves. Now, traditionally, a bank like Deutsche Bank will make a business decision. They have to weigh like the opportunity cost, because if they have excess reserves at the ECB, well, they could have had that money invested somewhere else earning interest. So that's an opportunity cost. But if they were short because of an unexpected withdrawal from Deutsche Bank, like a big customer leaves, like a sheikh decides to say, give me all my money, so suddenly they're short on that on reserves, and now they got to get it, and it's a big problem. So they always want to, as a business decision, have, let's say, a little extra. It's sort of like everyone in this room probably has some cash saved for a rainy day, right? In case you lose your job or you get sick or something like that. Okay? That could be 3 months' salary, as much as 6 months' salary, right? So that if you got injured and you can't work and you're not going to have income, your lifestyle doesn't have to change for 6 months. Everybody have that? 6 months in cash, sitting in a bank account somewhere? Okay? So does Deutsche Bank. Okay? They have it at the ECB. How much is your decision, right? You could choose 3% and have the 3 months and have the other months invested into stocks. Cool. But Deutsche Bank's going to make, okay? But what happened, especially here in the United States, when we hit the liquidity problem, remember, Bear Stearns basically went out of business. And they were not, I mean, they didn't do anything wrong. Let's just put it that way. Okay, Lehman Brothers, they did a lot of things wrong. It was just a liquidity issue with Bear Stearns. Okay? Their assets were worth less because the market was falling, therefore they could borrow less, which then made that market worse, and then, of course, then their assets fell more because other people had borrowing problems, and everything fell, money wasn't available, margin call, but it was all just because liquidity went away. So this scared a lot of banks. It's like adding more to the rainy day fund, because you're like, oh man, all my neighbors lost their jobs, which means they lost their houses because they borrowed against their house to buy the Cadillac Escalade. Then suddenly they lost their job. They can't pay the Escalade. They don't have any money to pay for their house now because the house, they borrowed more money than the house is now worth. Liquidity problem, you understand? They own a $1 million house and a $100,000 Cadillac Escalade, but their house is now only worth $700,000 or $600,000. And they lost their job on top of it. Why? Because the economy crashed. So now what do? Big problem. They still own the house. They still own the Cadillac Escalade. It's a big problem. Cash flow, and they can't borrow against a house that's worth less than you owe. But wow, okay. But the market changed, right? The market changed. And by the way, Bear Stearns didn't have any Cadillac Escalades borrowed against. It's just, they owned a lot of, it was something like 98% of their mortgage portfolio was paying the money. People were paying. They had good performing assets, but the market collapsed. And now they couldn't borrow money overnight. It's just really, so other banks now would say, like Deutsche Bank looks at like a Bear Stearns scenario and say, wow, that could happen to us. Like, right? So what they do is they keep more excess reserves and more excess reserves and more excess reserves. Okay? So now, how do you get those excess reserves out of the ECB? See, do the excess reserves at the ECB do anything for the European economy? So the ECB is printing money, right? Is money supply going up? Think about it in the United States. The Fed printed money, trillions of dollars. Did money supply go up? Well, it depends on how you look at it. $1.6 billion is parked at the Fed in excess reserves. So the Fed gave the banks the money, and the money, right? And the banks gave the money back to the Fed. Did the money supply increase? No. That's why we don't have inflation in the United States. How can money supply go up if the Fed bought a bond, right? So now they own a bond. That's quantitative easing. They bought a bond from a bank. They gave the bank the money, and the bank simply stuck it back at the Fed as excess reserves. They didn't make any loans. Two reasons. One, they don't get paid to make loans because interest rates are so low. And two, consumers and businesses, they don't even qualify for the loans. They don't even need the loans. They're like, increase my production? What do you mean increase my production? I don't have any customers. Right? You see the idea there? Why would you be a business doubling the size of your factory and buying new equipment when you can't even sell current inventory? So, like, to assume you print money and suddenly you've increased money supply, well, you're kind of just assuming if a bank says, all right, I got $1 billion of loan out, that people line up and say, I'll take your $1 billion. And the bank says, oh, really? Boom. Hey, full demand for the supply of loans, right? The loanable funds market has 100% demand at all times. Get out of here, right? So this causes a problem. So if you're the ECB now and you got tons and tons and tons of excess reserves simply because you're doing quantitative easing, stabilizes the banks, but then what? If you lower the interest rate that you pay on those reserves to negative, and now Deutsche Bank has to pay the ECB money to hold their excess reserves that the ECB gave them. So it's like the ECB is giving them an interest rate and charging them an interest rate on top of it, right? So it's just, right, we'll lend you the money that's going to cost, or in this case, we'll give you the money, but that'll cost too. So suddenly, what are the banks going to want to do? Get the money out of the ECB. Might as well lend it to somebody. Okay? So we'll see. Yeah, Lucas says that destroys the money multiplier. So what happened during the Great Depression of the 1930s in the United States? The Fed printed money and the economy tanked. Why? I thought if you printed money, that the economy would stabilize and inflation would kick in. That didn't work. That's what they did. And there was two reasons. One, they didn't watch the money multiplier, and two, the United States was still pegged to the gold standard, and that was also a big problem. One of the major reasons we're not on the gold standard was the problems that central banks had when we were pegged to the gold standard. How do you guys get me into this stuff? All right, we're on a calendar. Amazing. So I guess, let me ask it as a question then. There was a rumor, or let's say a comment by the head of Morgan Stanley that said the ECB might lower to negative interest rates, right? Lower the deposit rate to possibly negative. Did you fully understand the consequences of that before? Like, was that a big deal? Like, were you on board with that? You're like, oh yeah. But it's sort of a benign piece of news that you won't even read about really in the newspaper and stuff. But it was a comment from someone probably fairly smart. I guess if you're in charge of a bank, you're probably pretty good with money. Not necessarily though, right? But how about now? It was a long drawn out answer, but talking about the monetary base versus monetary supply and why there would be excess reserves and too much excess reserves and why the ECB would possibly want to lower it to a negative rate and what consequences that could possibly have. Um, cool. So was that helpful, guys? The big long drawn out question response. Cool. Yeah, we got to do the COT, right? Back in business school, yeah. Well, and speaking about that, I have a fundamental analysis course for those that are learning fundamentals, and I've taught them about the money supply, but I've made those basic assumptions that excess reserves are going to be zero and that there will always be demand for those reserves. But we know that that's not true in the real world. Banks don't always keep excess reserves at zero. In fact, that would be dangerous and be a very risky business decision. And two, that there isn't always demand from the market for those loanable funds. So after I'm done, now I've done the money supply, and I'm just getting the people that are taking the fundamentals course. I'm just preparing them for the Series 34. But then I need to go back and say, all right, let's talk about the real world now. Let's talk about behavioral finance. Let's change up the variables. What if there is excess reserves? What if there isn't always demand for money? So, behavioral finance for currency traders, I think it can get pretty fun. All right. Snoop Dogg G on the COT. All right. Talk about Euro. See? Slight increase in demand for euros. Cool. And what? Less bears. Just slightly some bulls. Somebody's buying, but not much. But someone definitely week over week, somebody bought the euro. I wouldn't call it radical buying, but somebody bought. But it seemed to me a lot of people got out of the short trade too, right? So it's interesting to see that. But because I wouldn't have expected much of this, but maybe that's just normal short-term buying. Because what this won't tell you is the intent of the buyers and sellers, right? So to me, I'm going to guess, because I guess it's my bias. So I'm going to have a built-in filter. And the filter is going to say, I'm going to interpret this the way I want to. And it's confirmation bias, and I understand it, but what am I supposed to do? Guess against myself? I mean, all of a sudden, you'll never be able to make a decision, right? So I'm going to assume this is short-term on both. A slight increase in short-term buying and a slight increase or decrease in short-term, in long-term selling, maybe. So I'm still going to short the Euro USD. And as you know, this is old data. I actually did short the Euro USD. Fine. Cool. But, so nothing says, I'm wrong yet. So just a slight uptick for Euro. Going on a trip in my favorite rocket ship. How about the Great British Pound? Okay. Short, short, short. Amazing, huh? No change. Less long, less long. What? The bulls are getting slaughtered, guys. But there's no bears either, so it's just bulls getting out. Now, we have a pretty impressive upswing going on with the British pound. So I find that quite interesting. And of course, look at the black line. We were neutral. The market was neutral a month ago. Down, down, down. That's net, which means it's more bearish, but only, and this is why you have to break out all these lines. It's more bearish, which means there's more people short the British pound than long, because we're below the zero line. So it's, right, it's net bearish, but it's only because bulls have gotten out. No one has even shorted it yet. So it'll be interesting to see what goes on here. Yeah, you have to remember this is as of Tuesday of last week. So it is a little bit behind, but I'm trying to discern short and long-term trends from this data, right? I'm trying to get market sentiment. For example, USD yen. All right, so we're looking at the yen here. And the market is essentially neutral and prices moved sideways. There are no bulls and there are no bears. Out here on the perimeter, there are no stars. Out here, we're pipped immaculate. A little Jim Morrison poetry. You like that one? You know what it's like to be in the USD yen since August and still not make any money? I'll quote the poem again. Let me tell you about heartache and the loss of God, wandering, wandering in hopeless night. That's what it feels like. And I'll tell you from experience, within a day of you completely giving up and getting out of the trade, boom, it's going to take off. Let's go to Aussie. Okay. Aussie recovering off of a double bottom at 69. That's actually kind of funny. Coming up to the zero line, but we're still quite net bearish. Was that right? Ron says VH1's running specials on the doors. Yeah. The trader awoke before dawn. He put his boots on. He shorted the euro, and then he walked on down the hall. Seems like as a trader, I'm always waking before dawn, right? So anyways, working our way back to neutral, but still technically net bearish. But look at a lot less bearish than before. Okay. A lot of people were short the Aussie dollar. Now let me ask you something. Is this relevant, important information? Nobody has added to their long positions in Aussie dollar in over a month. In fact, over 2 months, there's less people long. Okay? Nobody's buying the Aussie dollar. As of last Tuesday, no new bulls. None. And the week before that, none. Week before that, less bulls. Week before that, again, essentially no change. Nobody is buying the Aussie dollar. But look at this. For 2 months in a row, less people are short. No, I mean, maybe, right? Matt K says, so it's USD weakness, or it's quite literally short covering. These people were in the market. Okay, look where they exited. They exited the market at the peak here, and within 2 weeks, the market bottomed out. Right, less short. Right, so do it this way: less bears, 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 less bears. That means for all those weeks, for 8 to 10 weeks in a row, there's just less people pushing the market down. To offset a bearish trade, the broker has to enter a long position to offset the short position. So eventually, the market's rising, but not because people are buying. And because it's relative to something else, it looks like it's going up. But nobody is buying it. It's just relatively less bearish. Is it USD weakness? Yeah, that's going to be in the equation, of course. But I think what we're looking at here is a dramatic decline in bearishness. Or at least they're not putting money behind it. Maybe they think 70 is support. What kind of dumb shorts at support? Clearly not large speculative hedge funds. They're like, whoa, at 70, I'm going to take my profit. But at 75 or 80, they'll probably resell again, is my thought process. Okay? You see? My guess is today is October 19th, okay? By December 19th, I'll probably be short this. Somewhere in the next 8 weeks. So this thing can rise from 72 to 74 to 75. How about all the way to 80? Cool, man. And then I'll probably short, and I'll probably see this orange line or this yellow line, whatever you want to call it, start heading back up. And that's me shorting, but other people shorting too. Because I can see nobody's buying it, so I'm setting myself up for the future in a positive way, because I know even though price is going up, the market sentiment is not bullish. There's a difference between not bullish and bullish, right? But, no. Is there a difference between not bullish and not bearish? Or bullish and not bearish? Man, I'm screwing that up. Let me say it differently. I'm not even going to ask a question. There is a difference between the market is bullish and the market is not bearish. Okay? We'll all agree price on the Aussie USD was at 69 something. Now it's 72, almost 73. And I'm looking at this as the market currently is just not bearish. But that doesn't mean it's bullish. Yes, Ron, exactly. I did talk about this at FX Street a couple of weeks ago. So in the future, if nothing else changes, right, all of this being equal, in the future, even if price is up at 75, and this and the basics of this chart here, they don't change, then I will look to sell it. Is it going to be this week, next month? Don't really know. Okay? Kiwi, neutral. Okay? See that? Neutral. Less bulls, less bears. The whole thing's neutral. No direction. Nobody's on that trade. Done. Next. Kitty cat. All right. Okay, USD CAD has been going up for quite some time. And then a big hiccup here. And very little change week over week. See, short CAD, 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 short CAD. Right? Look at selling CAD, 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 selling CAD. All of a sudden, out, 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 out. Well, what happens to the USD CAD price? This is the red line now. Which one is it following? Which one is it following? Bearish traders or bullish traders? Nobody since July has bought this thing. And really, if you look at it, really no one in the last year, year and a half has actually really truly bought CAD on the long term, right? These are open positions in long Canadian dollar. I would just say it's a pretty flat if you averaged it out, right? So the market is either bearish or not bearish. If it's bearish, USD CAD goes up. If it's less bearish, it comes back down. But you're either selling CAD or taking profit. Selling CAD, taking profit. Selling CAD, taking profit. Selling CAD, taking profit. Is that helpful, useful information? Okay. And you can see the interest in trading, and I mean the attractiveness of trading. This currency pair has diminished greatly since the middle of summer. Okay. Is it because the Canadian economy is getting better and commodity prices are getting better and this is making the Canadian dollar more attractive? No. I mean, if you look at it, since the last month and just about a month, there's actually less people bullish. So it's just a lot. There's just other things going on, and it's a reprieve for Canada. Wasn't sure if I finished this. Okay, so let's just make sure. Okay, Canada, 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 ECB, 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 right? And inflation data on Canada at the end of the week. So maybe you do want to trade Canadian dollar this week, right? And you have the opportunity to shine as a currency trader, all right? Download and read the monetary policy minutes out of the RBA. Download and read the monetary policy report out of the Bank of Canada. Download and read the press conference text. And you'll be well on your way to faking your future success, but consider it training. You're training yourself to be successful. Right? One of the things I say in the book is fake it till you make it, right? Just pretend. And one day you'll forget you're pretending. And that will probably be the day you're successful. And you'll look back one day and you'll say, oh, you know what? I totally forgot that I was faking it. And I still have been doing these things all these years. And now I'm hugely successful. Yeah, check their website, Jabba. It's all good. So, hey, man, I want you to succeed. I hope you know that. And I'll be here Tuesday, Wednesday, Thursday, Friday. Keep bringing good questions. So I'll see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Yeah, see you tomorrow.